the supply demand setup is insane. These price moves going from 75 to 90 happened on very small volumes.
All right, everybody, welcome back to the next big rush. I am Fabi, but you're already tired of looking at me and listening to my yapping. I am here with Gwen Preston, the Resource Maven. She's a newsletter writer, and she, to me, will forever be the one who was pounding the table on Great Bear when it was cheap as chips, as they say it in Britain. And I never listened to her, which was a massive mistake. And amongst other stocks, she's seen and identified really early on and seeing them rise to amazing, amazing highs. Gwen, welcome welcome to the show. I'm saying welcome very much. This is it. This is the new
I
thing
love
now.
that. Welcome very much. I appreciate it all the ways.
Awesome. Gwen, I don't know how long you've been in this market and reporting on it, but I just remember you always being there, right? Like you're in Vancouver, you know the people behind the companies, and you shake hands with them. You ask them questions that nobody else wants to ask them. You get to the bottom of things, and you find really great gems early on. So I'm going to ask you straight up, what are some of the wins that you've had in your career that you've been able to point your subscribers to that you say, yeah, I did that. That was really cool.
So, I mean, Great Bear is the standout for sure. How could it not be? What I love about looking back on the Great Bear story is, I met Chris Taylor when he was still like struggling to raise money. And I certainly saw something in what he was doing that I thought was special. And it's special because it just ticked all the boxes, right? You're always looking to check the boxes. There has to be a solid geologic thesis. There has to be, a land package that can be explored and is in the right sort of area. And then there has to be like really good people involved. There has to be a good share structure. They have to have access to capital. And yeah, there were aspects of it right at the beginning that I was like, there's something a bit special here. But I don't want to say that I knew that this was going to be the one, because that would be a blatant lie. And the whole thing about investing in juniors, right, is that you have to buy a bunch of explorers because you don't know which of those might turn into the Great Bear. So absolutely Great Bear, phenomenal win for my subscribers. I mean, I love meeting subscribers whose lives were changed by that. But I mean, there's been lots that have not worked out in the same way. The other thing that I love looking back on the Great Bear story is that I did continue to buy and encourage people to continue to buy all the way. And I think the reason that I was very confident in that is hard for a lot of investors to do, which is the sort of deep geologic knowledge. I'm not a geologist, but I've been around the space, like you say, forever. So I understand quite a bit of geology, and I do have access to people. So I could sit down with Chris Taylor every few months and get a really solid update on what he was doing, why he was doing it, his thought process. And that's why I understood that the LP fault was a game changer. This wasn't just a high grade thing anymore. This was a game. This was a big thing. And that's the service that I think I try to provide, right? There's a lot of investors out there, and I love it, who are really interested in junior mining. But junior mining is really hard to keep up with, right? There's so many projects. There's so much knowledge that's needed to understand any individual press release, whether that's knowledge of the people. Like, you got to read between the lines. You got to understand the geology. You got to understand the impacts of politics and all this stuff. And it's hard to do. So I think that's the service that I try to provide. I spend all my time doing it and then try and help spread that knowledge around to some extent. And it's really gratifying when it works. Of course, there's lots of times when it hasn't worked. And then sometimes the ones that win can be a bit surprising. I remember having like Caledonia Mining was this like small scale producer in, my gosh, I'm not even going to remember the country. It was at Botswana. It was like a small scale gold producer. And for some reason, it went up. It was like a 900%. And you're like, where did that come from? Okay. And then there's some where you get the timing right. Sigma Lithium is a good one, right? I mean, I was just introduced to that story. Lithium was hot, but Sigma was a little bit quiet. They hadn't done a lot of marketing, and it was that recognition that they were on the golden runway. They were building the mine. It was an inexpensive build. They had the right team. And so that's in the portfolio and is a nice win. And then uranium, oh my, now it's doing well. But this is a good example of being early is arguably the same as being late or being wrong.
Yes, I know all about that.
Yeah. So right now, uranium is just a lovely, lovely space to be in and to think about and to keep buying, in my opinion. But yeah, it takes a lot of knowledge, and you got to kiss a lot of frogs. That's the nature of junior exploration, because the rocks at the end of the day are in charge.
You just said that uranium is something that people should probably take a look at and should probably, consider buying right now. There's this big debate happening right now on the Twitter sphere of, okay, the decoupling has happened, right? I have been talking about decoupling in a different way of, hey, uranium stocks and uranium are going to decouple from the rest of the market. Therefore, you should look at it. What has happened actually is the price of uranium has decoupled from the equities, which
I
is not
know, right?
exactly what we were aiming for. And what's your take on uranium, not just the commodity, but the equities themselves?
I mean, I have to believe that this is just, I mean, I was chatting with a uranium guy just this morning about this topic. And I have to believe that there's just a few factors, and momentum has compounded the selling right now. And that's just that, like I say, a lot of people were into uranium early. And so when you've been waiting for something for a long time, it's absolutely fair to take gains when they're given to you. And who knows what people's like line in the sand was. $75 uranium. Go back a year. $75 uranium might have seemed like a crazy, oh my gosh, if we get to $75 uranium, that's where I'm selling. That would have been a very reasonable promise to make to yourself a year ago, right? And so if people stick to their own promises to themselves, that's an important part of managing risk in your portfolio. Of course, you also have to amend your rules based on new realities and whatnot, but I think there's just some profit taking on the retail side right now. My understanding is that the uranium funds are still very right? They're looking for more positions. They just want to keep adding because, and this is something you've talked about lots. I mean, the supply demand setup is insane. There's just, right, these price moves going from 75 to 90 happened on very small volumes because there isn't supply. Like, it just straight up isn't out there. But yes, the equity response has been interesting lately. We got benefit. I feel like one of the pieces of evidence that shows that it's still a lot of pretty informed investors playing the uranium space as opposed to generalists. I think one good piece of evidence of that statement is that it's really the companies that are able to produce into this supply gap immediately or in the near term who are doing the best. And that makes sense because they are the answer, so much as they can be, to the immediate problem, which is that we don't have supply right now and we don't have enough supply for the next few years. The overall love for the space there isn't enough generalist interest in the space yet for that to sort of come down and really benefit, the pre-discovery explorers haven't really seen anything yet. And even those who, the share prices of quite a few companies haven't actually moved that much yet, if they're not on that production train. I do think that it will happen. But as you talk about this decoupling, stocks are always part of a bigger picture. And I agree that the supply demand forces in uranium are so insanely skewed that it should decouple and perform in its own way. But at the end of the day, if we're not in an environment where investors are confident that we're going towards economic growth, then they're not thinking about investing in commodities as a whole. And so these things always, it's 2 steps forward, 1 step back. So I think that's all that's going on, is a 2 steps forward, 1 step back thing. And fair enough. I mean, when you see stocks like NextGen having gained so significantly after people had to wait a long time for that, you can't fault people for taking some money off the table. Is it weird and frustrating that that's happening while uranium is marching higher to like almost record levels? Yeah, absolutely. It's weird and frustrating. I feel like in the new year, we're probably going to couple again and carry on. But we shall see.
We shall see indeed. I think it might be fair to say, correct me if I'm wrong, that your bread and butter is gold and silver stocks. Is that correct?
Yeah, gold and silver.
It's what comes up the most, I
Yeah,
guess.
for sure. I
Right.
mean, I love copper and uranium as well.
Mhm.
But especially in the last few years, it's been more gold and silver because they've been the ones that where there's been some opportunity. Copper and uranium, at least over the last 5 years, haven't provided as much
So let's
excitement.
let's talk about opportunity in the gold space. I have been looking at pretty much pick any developer, and I am looking at all of these different feasibility studies, pre-phys, whatever the stage is. And I'm looking at the assumptions, and they mostly look okay. Obviously, everything is a guesstimate when it comes to mining. And I'm looking at the price of gold, and it's holding nicely. And I'm looking at the NPVs versus the market caps, and I'm scratching my head, and my head is getting really hot from all this scratching because there just seems to be a massive disconnect. Where do we go from here? Is it going to take higher gold prices for us to have sort of a gold revival in, the juniors? Or are people just going to finally wake up to the fact that they're already cheap with gold where it is?
Mhm. I think it is going to take. So, I mean, gold, yeah, the price of gold is fantastic, but it's not dramatically different yet from where it has been for a few years. And to be honest, even though it's at a very lovely level in terms of being able to make money, if you're a gold producer, costs have been creeping up. But, anyways, it's at a lovely level. It's been sideways for 3 years. And that's the definition of boring. So, I don't think that investors, it just hasn't provided any kind of pizzazz. And then that's what investors look for. They look like whether you're technical, whether you're fundamental, whatever, you're looking for momentum. And there hasn't been any momentum in the gold chart. So those of us who know the history look at the gold price and we're like, this is a really amazing level. Why isn't it working better? And I think it's just that it hasn't developed that momentum. It hasn't developed that excitement yet. Now I feel like the last couple of weeks and are have provided reason to believe that that's going to change in 2024. And of course, you've talked about this, but this is, Powell came out and the Fed came out and talked about rate cuts. And that was like the thing that was needed, right? We all needed the market as a whole, the gold space for sure, but the market as a whole needed confirmation that all of these bets on rate cuts weren't incorrect because there'd been a huge bet, right, on rate cuts in 2024. And when the Fed came out and confirmed that, yes, we are planning on cutting rates in 2024, and that's a proactive move. They're not waiting until they've strangled the economy. They're trying to cut rates so that they can support and maintain the way things are, which is commendable. Um, and that's obviously incredibly important for gold, right? Because gold for the last 3 years, while it's traded sideways, has done so despite the most important anti-gold force being like the biggest thing in macroeconomics. Like the biggest thing that was going on was rate hikes. And rate hikes are by definition the worst thing for gold. And yet gold just was like, I can do this. I can handle it. Bring it. Hit me with some more rate hikes. I'm just going to stay right here at like 1940. Okay. And that, I mean, I think central bank buying is the reason that kept happening. Central banks are stockpiling gold in the face of de-dollarization and deglobalization. There's a chart that I love that shows it's from the World Gold Council, and it shows central bank buying, and it shows it segmented into disclosed and undisclosed. So the World Gold Council knows all the central banks that are buying, but the banks are individually allowed to say, yes, you can say that I was the buyer, or they can say, no, keep it anonymous. And historically, it's been mostly disclosed with a bit of undisclosed at the top. And the last 3 years, it's flipped. It's like primarily undisclosed and the bars are much taller because there's a lot more buying, and most of the bar is undisclosed, which says to me, that's just stark evidence of there's a lot of countries out there that are quietly preparing for whatever might come from this deglobalization movement, right? De-dollarization, deglobalization, these were very arm wavy things for a long time, but now they're realities. They really are. And you need to have a fallback in when dramatic change happens, and that even if it's happening fairly slowly, but this is a tanker turning around in the ocean. That's what de-dollarization and deglobalization are, and eventually it does turn around. So central bank buying is what kept gold strong despite it being punched by rate hikes for 2 years. And now that headwind, the thing that kept gold down despite all of this central bank support, poof, it's just gone, right? And so I do think that that fundamentally creates a setup that lets gold do what it hasn't been allowed to do for a couple of years. And the chart is now very strong, which is helpful for all the technical traders. So we'll see. I mean, I don't want to get too optimistic, but the disappearance of the eradication of the huge headwind of rate hikes is very significant in my books. And so I feel like it does set gold up for the opportunity to go in 2024. Whether that, I mean, if we end up in a recession, I would prefer that we end up in a soft landing with people excited by gold because we're in a rate cutting environment. If I could choose, then that's what I would choose, because then I think all metals would have an opportunity to perform. I don't get to choose, it turns out, unfortunately. But whether we end up in a soft landing, whether there's some sort of recessionary time, I mean, they all can work for gold as long as we get rate cuts. And now that is what we've been told that we will get. So that was a really long answer. I don't even really remember what the question was anymore.
That's the kind of answer that we were looking for, Gwen. So regarding the whole notion of the soft landing versus hard landing and whether that's going to look like a real recession or not, is that impacting the way that you look at copper stocks at all?
Yeah, I mean, I did not buy into base metal stocks other than those that I thought were potential to deliver a discovery. So like if you're a pre-discovery explorer and you have the potential to deliver a discovery, it actually doesn't really matter what the metal sentiment is. Like discoveries can shine no matter the market. Like NextGen discovered Arrow in a terrible uranium market, and that didn't matter. But if aside from those with the potential to deliver a significant discovery, I haven't been buying base metal stocks for the last year. And the reason is exactly that. The risk of overall economic downside ahead just invalidated the thesis, right? Because if you're buying a copper company that is growing a resource and is about to produce a PEA or that is even building a mine, I mean, those are gradual stepwise value builds, but a recession just erases them. And so I just thought that risk was too present to bother with that game. Like it was too risky. You're supposed to buy a copper developer because it's a low risk leverage to copper. And I just thought that there was no low risk opportunity in copper because of that macro setup. I mean, I talked to me 3 months ago and I was still very divided. I'm like, we could be heading into a recession. I don't know. Like the data were so mixed, so incredibly mixed, right? Open one report, open another report. You could be convinced either way 20 times a day. It was crazy making, actually. And there's still, I mean, I still hesitate on being optimistic that we're going to avoid a recession because this rate hike cycle has been insane. And, you know, what it does to debt payments on household and corporate levels is really dramatic. But so far, so good. And if we do get some rate cuts, I mean, I feel like it might happen. And the US economy has been shockingly resilient. I mean, stocks are at all-time highs. Unemployment is still under 4%. Like we still have better than 3% or 3.5% growth. Like it is amazingly good out there. The worst thing has been sentiment. When you go to ISM surveys of manufacturers or whatever, or surveys of retail sentiment, they've been in the gutter for 2 years, despite things actually looking good on a hard data front. And now that sentiment is starting to shift a bit as well. And that may be a rate cut thing as well. And that matters because sentiment we can create our own outcome. You know, if people are too negative for too long, then they can create a negative outcome if it were possible to sort of go either way. So I'm more optimistic now that there is a reasonable chance of getting to this magical unicorn soft landing. The fact that I call it a magical unicorn, it sort of captures how likely I thought it was for a long time. That's how I characterized it. Now I'm like, oh, maybe we're gonna
Maybe
get
we're
there. Like
getting it. Every now and
unicorns are
again,
real.
that does happen sometimes. I'll be scratching my head even longer if that does happen.
Right?
I honest to goodness only thought that a soft-ish landing would only be possible whenever a powerful government actually had fully implemented cryptocurrency as its main,
Mm.
monetary way of doing business, because then you can change the supply basically at the press of a button just by programming it. And so I
Yeah.
thought, okay, maybe they're going to use this in order to, like really pull the levers whichever way that
Yeah.
they want. But that hasn't happened yet. And if they can figure this out without a major recession, then I'll be like, this is quite something. Well done,
And I
Powell.
mean, at the end
You
of the
did
day, the
something.
big problems that we're discussing still exist, right? The debt
True.
loads. I mean, the bigger thing in the rates, if you really step back and look at 20,000 feet, I mean, the big issue for the U.S. government um, is their need to issue debt, and like the number of buyers of that debt just keeps sliding. Now, the US bond market, the treasury market is the biggest, most liquid, most important market in the world. I'm not going to stand up there and say, all of a sudden, there's no buyers for US debt. That's
This is
not
no
true.
uranium spot market.
Exactly. This is the opposite exactly of that. But we do have China buying far less, Japan not buying because they're managing their monetary setup differently. We have Russia, of course, not buying any. There's a lot of banks around the world, governments that aren't buying US treasuries to anywhere near the extent that they were before. And yet there is a deficit necessary way of operating. So, I mean, the issuances just keep rising. And so this is a kick the can thing. I mean, we've obviously kicked it for quite a while already. I don't think that can is about to explode, but that setup doesn't get fixed even if we manage a soft landing from this rate hike cycle. But that's very big picture stuff. That's like de-dollarization. That's a tanker and that tanker is still just getting started on its turn.
It's a decades long conversation, and we have been talking about it for about a decade.
Right? Yeah.
Gwen, you probably look at hundreds and hundreds of different companies every year trying to assess, what is worth your money and what is beyond that worth openly and publicly talking about and recommending to your readers. How do you assess risk in a company? Is it about jurisdiction? Is it about team? What are some of your gauges there?
Yeah, I mean, it's the question, right? It's interesting. When I started my newsletter, which is almost a decade ago, I feel like the conversation around risk was much more specific. People wanted to talk about jurisdictional risk. They wanted to know which jurisdictions I liked and which ones I avoided. They wanted to talk about they wanted to talk about capital markets risk, and that was there. It was just it was a very specific conversation. Now that we've gone through this grind of a bear market, sideways market, whatever it is, the risk has become I feel like there's less benefit in focusing on the individual aspects of risk. Definitely still matter. You obviously need a project that you can actually work. There's no point trying to advance a nickel project if the nickel price is expected to decline for the next 5 years, right? Like these things matter. But the way that I summarize it is when you hear the story and have a conversation with management, do you get a clear sense that they have a well-formulated plan to try to create new value for shareholders in the near and medium term? And that sounds kind of simple, but actually what that does is capture all of those aspects of risk, because if you want to create value, you're going to need to have money. So that means that you need to be able to access money. And that also means that you need to have a plan for how to access that money that won't inhibit your ability to create shareholder value. So this is all about when to finance and how to finance and who's in your book and how do you create market support. And then what are you actually doing? And are you good at articulating what you're doing? I mean, I think there's been it's really important to say, these are my goalposts that I'm trying to get to. And then if you get there or you don't, because the rocks are often in charge and you don't always get to decide, you have to explain that you tried, that you either achieved it or didn't, and then this is what you're going to do next. And it sounds kind of simple, but it is shockingly rare that there's a clearly articulated plan with timelines and deep capital markets knowledge and planning integrated into that. And it is not just a hope and a prayer that a single drill result is going to open doors and make things happen. Like, if this works, then we'll do this. We also have this going, so it might work. Maybe they happen at different times. If they both fail, then we can bring this third thing from the stable over and we can start focusing on it. These things are complicated. Running a junior company is not easy. You got to have a lot of cards in your deck, and you have to be able to play them in different ways and understand who else has cards and what you need from them. It's complicated, but it really comes down to that. Like, what are you going to do next week, next month, and next year? How are you going to fund it? Who's going to do it? Do you have the knowledge? Right? Like, do you have the permits? Like, how are you going to create new shareholder value? And also, management really matters, and management's ability to simply articulate, to create and then articulate that plan. It's like being a teacher. You can't teach something unless you actually understand it. So if management can't articulate a clear plan, then they don't have one. And that is the biggest red flag for me, is the lack of a clear plan, the lack of, and an inability to explain what they're doing as a story, because I think that really matters. There's resource focused funds out there for sure, and there's resource focused investors who will get excited about your technical data and, your geophysical maps and things like that. But there's a lot of money out there, retail through to big fund, family offices, big funds, that need you to tell them a story. And I'm not saying that to suggest that they're dumb or something. They need a story. They're not geologists or geophysicists. What they need is a story. Why are you doing what you're doing? Like, why is it interesting? Why is it exciting? Where might it go? That's a story. And so can you put it into a story? Can you tell people a story? Stories are what people remember. Stories are what click in people's heads. And people, for better or worse, investors often get very attached to individual stocks. And they'll do that because the story resonates with them. And so, yeah, it's about whether management can do that. Tell a story that's clear, well articulated, and has backup plans. That's sort of how I assess whether they've managed risk.
Yeah, you said that some people fall in love, with the story of a company, which I've seen, to a fault. And
Yeah.
sometimes, they get the opportunity to meet with management, and so some of these CEOs, like they're great salespeople because they have to be, and that's not anything negative on them.
Mm-hmm.
Good for them because lower cost of capital, they're able to raise money. But at the end of the day, I do see a lot of retail investors just attaching themselves to a management team or a company to the point of being blind,
Yeah.
to all the red flags or the many colored flags that they might see throughout, development or lack thereof. What
Mm-hmm.
other mistakes do you see investors making right now as you're looking at all these different markets? You're looking at uranium, gold, silver, copper, and you're looking at these as opportunities, and you kind of know, okay, this type of company is something I really like versus that type of company. What do you think most investors are missing?
Interesting question. So we've been waiting for a good market for metals for a long time. I mean, if that is developing, I mean, and I'm ever an optimist, so it might be. Then now is a great time to position. But I can't chastise anybody for not jumping in right now. I absolutely can't, because there's been head fakes before. There's been right, and Yeah, so I can't chastise anyone for that. Yes, there's great, like you talked about the incredible valuation disconnects for some of these gold developers. I think that's very true. Some of the things that are giving me confidence that there might be some change on that is there has been some M&A lately that has started to address that, right? We saw Dundee buy Osino. We've seen the merger of Calibre and Marathon. We're starting to see some in the uranium space as well, some consolidation, and quite a few investments, like majors doing strategic investments. They're not buying out companies, but the competition for majors to invest in Hercules Silver when they hit into the porphyry was really like, okay, finally, the majors are like,
And then the stock shut up even more, right?
yeah, exactly. And Barrick was buying in the open market. Barrick never buys in the open market. They were buying in the open market because they were so excited. So there's a couple things there. One of the thing that Hercules situation really underlined is something that those of us in this space have been talking about for a while, but it's this lack of discoveries, right? Like, we are so ridiculously short on copper discoveries, significant copper discoveries. It's insane. And the world is going green. And even if it wasn't going green, we need lots of copper for everything that we do, but it is going green. And that means we need way, way more. And so the lack of copper discoveries is insane. And that is why Barrick and 6 other majors were, in a fist fight over who got to invest in a brand new copper porphyry discovery. That's a sea change, right? That is not something that we have seen. And so if more money starts coming down from the majors, that will help. It's not the answer. We still need generalist investors to start caring about metals again, and that is going to happen on its own time frame. That's going to depend on the generalist investor deciding that the world is back on a growth path. When the world is back on a growth path, then investors will invest in commodities again, and they don't when we're not on a growth path. So we got to get there. We can't control that. But within our little space, I think the moves from strategics are helpful. As for what investors are missing, it's hard to say right now, because I think the comment about falling in love with companies is always an important one to discuss. I think it's really easy, like you say, someone meets a really good CEO who sells them a story and gets them very excited, and then they put too many eggs in that basket. And I talk a lot in my newsletter about how, and we said it even at the beginning of this conversation, as much as that drill target looks really, really good, the rocks are in charge and they might not give you what you think is there. And so you gotta own 10 explorers in the hopes that one of them will deliver a really good discovery. A few of them might deliver like, okay, progress, and a few of them will be complete failures. You got to own 10. You cannot own one. And then it's that whole investor mentality thing where you end up averaging down and getting deeper, and you're digging your own hole. And then how do you get out? Then there's this big picture positioning. I think one of the things that investors need to always focus on is like, what is the time frame of their investment thesis? Are you talking about trying to make money in the next 6 months? The way to do that really is probably with uranium or discoveries. Those are the only things that have some confidence, and that, of course, discoveries don't have any confidence at all. But like, those are the things that could happen in that short time frame. If you're investing for the next 2 years, then I think gold, silver, copper, uranium, they will all do well. But you have to always be aware of what your time frame of investing is. So I think that's really an important one. It's easy to get convinced of a thesis, the undervaluation of developers, the drill target that this person's going after, the idea that a copper mine or a mine that's adjacent needs this land and will buy it. It's easy to get convinced on individual stories, but you have to be aware of the timeline that it might take for that story to play out. And it's impatient. I'm an impatient person. I get it, but you got to always remember that. So I think that's another very common mistake.
Yeah, it's what I usually say. You can lose money on a really good stock if you don't have the right, time frame, and somebody else will pick the same stock and
Yep.
their timing will be different and they can, make out like bandits. That
Yep.
is very true. Gwen, thank you so much. Can you please let us know where people can go and follow you and get to know more about your newsletter?
Absolutely. So resourcemaven.ca is the website, easy to find, and all the social media connections are there, and Twitter, and I do lots of short videos these days, Reels and Instagram and all of that. So yeah, but resourcemaven.ca, it's the easiest place to find everything. And thank you so much for having me. This was a fun conversation.
Thank you. We should do this more often for sure, because this is
Absolutely.
great. I absolutely love talking about all of these gritty little juniors that might actually get us somewhere someday. Thank you so
Here's
much,
hoping,
Gwen.
right? Here's hoping.
Cheers. See you next time.
Take care.